Hey guys, Uncle Dan here. I just want to cover a few points from a video that Citron sent out today. Obviously, he spent very little time preparing for his video. I'm just going to point out a couple real simple arguments, challenges his thesis about GameStop being a $20 stock. And I'm using his own data, but he's got 5 reasons. I'm just going to go through them real quick. So the first one he mentioned, of course, is that, look, it's a failing gaming retailer. It's got a bunch of retail investors in it, and they're like frogs sitting in boiling water. They have no idea what's happening to them. Now, that analogy is interesting because I feel the same way for the short positions. There's a massive short position in GameStop since the stock was $4. Michael Burry from The Big Short went in the stock at $4. Smart guy, still has a stake, has reduced his risk a bit. So he's in at 4, massive short position in at 4. Who's the frog sitting in the boiling water? You tell me. So I'm just kind of baffled by the examples he's given. But let's go through the other ones. He talks about the elephant in the room, the massive short position. But he says, hey, no short squeeze. So far, the short positions have actually gone up in the amount of float, the amount of shares available to loan out, it's actually gone down. Now he's mentioned there's plenty of shares to borrow, but when I look at the number of shares available to borrow tonight, there's only like 10,000 shares, and the interest rate on that's like 23%. So he's saying there's a very reasonable rate of interest to borrow shares, and there's plenty of shares to borrow. There's no shares to borrow, and it's 23%. Now at certain points it's been as high as 40%. So what is the argument here? We have a massive short position which is greater than the float. The stock's gone from 4 to 40, and we have yet to have a squeeze, and because of that, he thinks people will just go in and sell more. But look, there is a point when those shorts are going to get squeezed. There's a point when the hedge funds that are short default. The brokers take over the short positions and they become market orders to buy in the market. We saw that with dry ships in 2016. We saw that with Kodak last year. So we've seen short squeeze. Andrew's right. There's not been a short squeeze yet. But this is going to be an epic short squeeze we're talking about here, right? There are more shares shorted than there is float. So, the fact that he's suggesting there's no short squeeze and there's plenty of shares to borrow, I'm just baffled by that. Number 2, numbers don't lie. He's talking about what the data says about the company's business. In the past, the business was bad. Going forward, it's not going to be bad anymore. We have a console refresh cycle happening. We know we have Cohen, who's acquired 10% of the stock with the option to acquire up to 20% of the float before the AGM in June. We have new management coming in. And he mentions how he respects Hedgeye. Hedgeye, as he rightly pointed out, in December referenced GameStop as their best long idea for 2021. Hedgeye came out to refute a Barron's article which says that GameStop's expensive. And they talked about how they've lost 2 customers who were short GameStop because they came out and recommended to go long. And their argument is, on the fundamentals, GameStop is worth 30. But with Cohen coming on board, the stock is worth somewhere between 50 and 70. And we're still not talking about the short squeeze, the epic short squeeze that's coming. Still don't have that happening. Third point was valuation. He wants to focus on enterprise value to profits, but profits are coming. Profits weren't in the past. The opportunity is in front of us, not behind us, right? So we should be talking about sales. We'll just lean on Hedgeye. They've done the numbers. They think the stock is good for 50 to 70, okay? So we'll just lean on them. They're the experts Andrew respects. So if they're saying we're going to 50 to 70, let's just go with that. I don't think I need to put any more work into it than that. That's straightforward. Then his 4th point was, who's on the other side of your trade? Now we know Mervin Capital is short the stock, but we really don't know who the shorts are. So I reached out to Andrew via Twitter, and I asked him if he could share with me any names that he knows of that would be shorting the stock, because other than Mervin Capital, I can't find any other names. Well, he's not come back to me. So his argument is you should know the other side of your trade. So we don't know who the shorts are, but we sure wish we did. If you guys know who the other shorts are, can you please leave comments down below? I'm still trying to figure it out. No one seems to be able to tell me who it is. On the long side, I guess, again, I think he's trying to argue that both sides should know. We know we have like 3 passive investors that have acquired like 30 or 40% of the shares, okay? Which means the float is not 70 million. It means the float's something crazy like, 40 million. And then we have like 70 million shorted. We know we have a massive short position. We don't know who they are, but we know we have some really smart people like Cohen, like Burry, really smart activist type investors who can smell an opportunity from a mile away. And they're committing big time on that. So that's what we know in terms of the smart people that are in there. We don't know who the smart people are who are shorting the stock, but we're pretty sure they're all frogs sitting in boiling water, using Andrew's own words. So, and then the final one he brought up was, the company can be your worst enemy. And he referenced that they could be a JCPenney, where, Ackman brought in a new management to try to turn it around and it failed. Or it could just be a Blockbuster Video, which just doesn't seem to invest in technology and gets left behind. So we have the console refresh cycle, and we have Cohen, which he mentions, but he just doesn't understand. Cohen has secured seats on the board. The AGM is in June, okay? Right now, he does not have a majority, but come June, they're going to shrink the board back down to 9, and with his passive investors, they're going to control 5 of 9 seats, which means Cohen is going to own GameStop come the AGM. Now, what kind of manager is Cohen? Well, we know him from Chewy. So we know he can take a legacy business and compete head on with Amazon and then turn it into a $40 billion business. We know that. He's done that before. So if we want to go back in history and try to project the future, well, come June, Cohen will be running GameStop. And we're going to see this stock move significantly higher off the back of some epic short squeeze once other investors realize that this stock is not to be shorted. Now, using Andrew's own words at the beginning of his video, he mentioned how he was short Tesla based upon the data. But once the data changed, once the growth and profits showed up, he was smart enough to reverse his short position, and Tesla is 100% higher from that date. Okay, so using his own words, we're going to reach a point where the data is going to convince those shorts that they've made a mistake. And from that point, if we follow a similar path, we'll be 100% higher than where the stock is. So where is that putting us? It ain't $20. It's significantly higher where it is today. So that's just my opinion on the opportunity in GameStop. I started buying it at 9. I still like it at 40. I'm waiting for the epic short squeeze. Do your own due diligence on this stock. This is not financial advice. I'm just sharing my thoughts on the opportunity. I hope that kind of gives you a more balanced perspective. If you combine the two opinions together, it might give you a little more insight into making some sense of what's happening with that stock.